JBlog, October 3rd, 2009. Today I started looking at the continuous unadjusted copper contract, which basically is the index that caused a lot of the optimism in the market early on, when the market hit a bottom in March. But copper sales would actually go up, the copper price would actually go up, and copper is known as the metal with the PhD in economics, so people started sitting up and saying, hey, wait a minute, copper's going up, economy must be better. Bye bye bye. So now we're 6 months later, and we're looking at the copper price, and along the way, along these 6 months, we had these big run-ups, then fall down, run up, fall down, run up, fall down, run up. And then over the last month or month and a half, 2 months, we've had this rounded top right here. The other thing that's happening is that 1030 exponential moving average has crossed over. It's not definitive quite yet, but I'm most interested in this rounded top, which is very different from these pullback highs, where copper price got ahead of itself, very much rounded top. This is a different configuration. So of course I sit up and I start looking at this, and well, as you probably know by now, I continue being bearish. Maybe I'm just looking for reasons why I should continue being bearish. And of course that reason came out on Friday, and that reason is of course the payrolls. Payroll losses ended up being higher than expected, which doesn't surprise me at all. I would probably put that down as a statistical uh, strange way of gathering the statistics to start out with on unemployment. Unemployment numbers will always overshoot, like be more positive at the beginning of recession and then be more negative at the end of recession, just because the birth death numbers will throw that out of whack, because they're based on historical information that is simply not up to date. So on Friday the market sat up and listened and paid attention, and perhaps we will have a situation where some bulls will sit up and think to themselves, no, wait a minute, this doesn't make sense. Isn't there supposed to be a recovery in place? And we're losing more jobs. So we'll see what the market will do with that on Monday morning. Now here we have a weekly chart of the New York Stock Exchange, the composite. So we have this big run-up rally with a little pullback in June, July, and it continued on. The significant part is that we've got two red bars, weekly bars here in the last 2 weeks, with a little candle wick on top and a candle wick on top, signifying some weakness. Is this the weakness I've been looking for and I've been talking about for a while? I would hope so, but of course, as always, there are no guarantees. I mean, I hope so for myself, because I'm majorly short. I do feel like a bit of a vulture there, waiting for something to die, which I don't really feel that happy about, but the fact of the matter is I am not determining the market's direction. I'm simply figuring which way it should go and then trying to profit from that. And that if that is down, then I don't have a problem selling short. I do obviously feel sorry for all the people that are losing their jobs in the meantime. The misinformation that we find in the news, I always find very fascinating. Here we have from Bloomberg an article of Alan Greenspan referring to the odds are there that the market will flatten out, even though earnings are doing very well. And I'm going, earnings are doing very well. Where are those earnings? The more important number that actually came out on Friday is the PE ratio of the S&P 500, which I've talked about repeatedly here. And that PE ratio is once again 140, which means that if we bought the S&P 500 and nothing changed we'd have to wait 140 years to get our money back. Now, I do not call that good earnings. I call that pathetic earnings. Totally overpriced stock market with no relationship to anything that ever happened historically. And another indicator here is the dividend yield that the S&P companies generate at 2%, which again is pathetic. Why bother being in that? Why bother being in stocks anyways? Why would you take the risk at 2% return with such an overpriced market? It makes no sense whatsoever. But then most people do not do that calculation. Here is Financial Triple, FAZ. One of the things that I'm in. It is showing, because of the large numbers over here, you cannot really see what it is really doing. Actually, let me just go over here into this program, and maybe we can see something a bit more in detail here. We have a potential crossover coming up here. So FAZ could potentially be going bullish. That would be nice because I have quite a bit of it. SKF, same thing. It's a double instead of a triple. Another thing I'm holding is SRS, the real estate inverse. Again, these in my mind are dirt cheap at this point. That's why I don't mind holding them, because the upside potential versus the downside risk makes this an attractive trading position at this point. Outside of that, crude oil hasn't been doing very much. Again, we've got declining tops right here, which potentially shows a weakening in the oil position. Now, I was surprised that on Wednesday oil price actually went up this high, because I thought that here we had support here, we had support here, and then it fell through support on the third time. I thought it would bump its head and it would fall down again, yet it charged right through this, so I was quite surprised on that one. Natural gas, I sold my natural gas position simply because of this. This is too much of a run-up for me. It goes down, down, down. I bought right around down here. Good timing, purely by accident. I had no idea that the gas price would reverse here, but I did ride this out. But I sold the position right about there because this is entirely too steep, and probably was a short covering rally, I imagine. Gasoline is still declining, so again there is no indication of economic activity once again picking up. Another look at copper. Once again, this rounded top here, very different from these top pullback rallies. This is something in my mind that is much more dramatic. And then we've got the S&P 500, which is showing declining tops. The other thing that is showing is we have an OBV that is definitely showing some downside weakness. The stochastics now shows as being almost oversold, but it could be down here for a while. We definitely have some declining tops in the tricks, and declining tops in the RSI as well, so the technicals are supportive. But then this thing could once again just roll around, turn over and go straight up again, frustrate the hell out of bears like me. I am bearish for the time being. Nothing has changed. I prefer being short rather than long, because again, with the economic fundamentals being the way they are, I just do not see a reason for a rally here. One thing I was happy to read is that the mom and pop investors have not returned back into this market yet, so they won't be ripped off as badly. I'm glad about that. This seems to be mainly the work of institutions, hedge funds, and so on. And yeah, I'm always happy when the little guy doesn't lose his shirt. So anyways, good trading next week. Hope you make lots of money, and good luck.